Undoubtedly, our economic outlook has downside risk, especially given the global uncertainties associated with Brexit, the US-China trade tensions, and indeed the Hong Kong democracy protests. Yet the Australian economy continues to grow. Real wages are also growing, albeit sluggishly. Inflation is low. The housing market has cooled off somewhat, and the government finances seem to be improving with a surplus emerging in the short term. Yet the commentary seems to focus on the downside and that implying that Australians have never been worse off and that the outlook is very poor. Wouldn't it be better to actually adopt the half-glass full perspective on the Australian outlook and Australia in general?
And Ali, Labor spent all question time looking at the downside risks in the economy. Should it be better to look at a half glass full? Glass half full?
Well, I think it's better to be realistic about this, Mike, to be honest. You know, retail sales are down, discretionary spending is down, even with the tax incentives that the government has put on the table, the tax cuts and the tax incentives to small business. There are several indicators, both anecdotal and financial indicators, that the economy is not doing as well as it could. We have the RBA putting interest rates at 1%, the lowest they've been in the history, with the potential for them to go even lower. We know from countries where the interest rate is 0% or in the negative that that does not contribute to economic growth. The government is saying that its economic plan is that the tax cuts will filter through eventually and we have to wait and see. But what if they don't? What's plan B? What's plan B if the tax cuts that we've already seen 15 billion flow through and people aren't out there buying their big screen TVs and spending their tax cuts because of high household debt, because they're using it to pay down debt, because of mortgage stress? So if the tax cuts aren't flowing through now and the government's saying this is their mantelpiece, this is what we're all relying on, they've put all their eggs into that basket, what happens when it doesn't? Or if it doesn't? What is plan B? I think it is wise and it is prudent to have a plan B, to talk about best case and worst case scenario.
Well, Zed, what's plan B?
I don't. Firstly, I don't accept the premise of much of what Anne said. But Mike, I think
Let's look at the figures. You don't have to accept what I say.
I'll get to that. I think the point of your question is correct. That there's been a big attempt, you know, by the Labor Party, other people in public commentary to sort of suggest that we're in a terrible space economically. It's simply not true. Now, the economy continues to grow. People have talked about the last quarter being, 0.5% growth and whether that should have been stronger. We saw a lot of factors there. And you talk about the global headwinds, we talk about the severe drought and a number of challenges. But our economy continues to grow. Employment growth is double the sort of OECD average, the developed world average. We've seen 1.4 million jobs created since we came to government. Unemployment is down around about 5%. We're bringing the budget back into surplus. We're delivering tax cuts, and this is where I'll go to some of the assumptions.
Well, that was exactly Mike's point.
Well, this is where I'll go to some of the assumptions that Anne was talking about retail sales. Well, we've barely got any retail figures, any serious retail figures, since the tax cuts actually started flowing into people's pockets. And the quarter that we're talking about was before the tax cuts came in. And people did fear, and whether you like it or not, during that time, that you were going to come in and raise taxes left, right and centre, because they'd been told there was going to be a Labor government, you were going to raise taxes on housing, you were going to raise taxes on retirees, all of those things. But that, of course, that plays into sentiment. So in terms of what plan B is, well, the economy is growing despite the global headwinds and despite some of the great challenges. We are cutting taxes, which we will see, I think, flow through into the figures.
But what if they don't?
Okay, hang on.
We are seeing the housing market turn around. We're already seeing strong figures in relation to that. We've got a large infrastructure program. We've got a skills agenda. There's a whole range of things we're doing, but people want to see those fundamentals right. And we believe we've got those fundamentals right. We'll, of course, continue to respond to the challenges, but I think the premise of your question is correct. There's a lot of talking down of what is actually a very strong economy.
And Mike, we are very fortunate we've got a resident economist here tonight. Danielle, how do you see it? Glass half full, glass half empty? What's the picture?
Look, I think clearly the growth figures are weak figures. This is the second lowest rate of annual growth we've seen since the global financial crisis. There are some positives that you've pointed to, but there are certainly a lot of risks on the downside. And this is why you come to the plan B point, because economies feed on momentum. If the momentum starts heading downwards, we need governments to be ready to act. So if we sort of see unemployment starting to creep up, at that point you really actually want the government jumping in and stimulating the economy, because we know that things can get really ugly really quickly. So they have to be ready to go to pull that lever. So I'm not saying that we'll get there, and I certainly hope that we don't. I hope that the tax offsets, will start to get the consumers out and buying things. But there is a real chance that that will not be the case, and we need to be ready to act.